Hello, everybody, and welcome to the Gold Rush. I am Sam Gatlin, an analyst at All Star Charts, and I'm joined today, as always, by my better half, Mr. Jason Pers, who wears many hats, a very talented man. He was a BMX rider in another life. Now he's running a fund, analyzing all kinds of markets, and he works with me at All Star Charts Gold Rush. So today we have a lot to talk about. There's plenty happening, whether it's emerging markets, whether it's grains and livestock, or the metals trade. Just commodities in general are heating up. Look at energy. Energy is starting to pick up. We had in Monday's call with All Star Charts Gold Rush Premium members, we talked about how the Van Eck Refiners ETF, the crack ETF, closed October at its highest price ever. So, that's not something you see historically during downtrends. So, I think that's just the first domino of many to fall in what could be the beginning of a new bull market for energy. But yeah, we're live on YouTube. We also have the stream going on our Twitter. So if you are on Twitter, jump over to YouTube and drop some comments for us. We'd love to answer any questions you guys have. But without further ado, Jason, let's just get into the charts. Mr. Jean Gauthier, if you will, slide number 2. How could we not start today's conversation with the dollar? Today I brought along a chart of the US dollar index futures going back to 2018 with the commercial hedger positioning and the lower pain. And you can see this data has not been updated for, what is it now, 5 weeks, Jason? The government
It's been a while. It's been a while. Yeah, 5 weeks. I've been counting. 5 weeks.
Oh,
Yep.
there's not many things I miss about the federal government, but the COT data is certainly one of them. So huge bummer. Please open back up and give us new data, because I want to know where this commercial hedger positioning is in the US dollar, because when the last time we got data from the government, it was the largest net long position since 2021. And you can see on this chart exactly what was happening back then. The dollar was putting in a historic bottom before one of the biggest multi-year face rippers ever. So, if the US dollar is scooping and scoring back above 100, I have a hard time believing we're not going to see further strength. But, Jason, you've been kind of on the other side of this. You've been one of the biggest dollar bears on Wall Street. You think this strength in the dollar will not last. So, what am I missing?
Yeah, I don't think this is going to last. And I give you a couple of reasons. One is every downtrend will have bounces. We've talked about that before. Of course, positioning is going to get, like Sam's pointing to here. Positioning got lopsided. It makes perfect sense that this thing would bottom out and start to rally again. But go to the next slide, Sam, slide 3. But if we look at the next slide, you start to see the reasons why this is different. Like everybody loves to say this time's different. Well, this is a little bit different this time. We're not in a tightening cycle just yet. We're not even seeing like the yield curve start to top out or bottom out at the moment. At the moment, we're in a bull steepening period. And I've explained this before, but for people who don't know, basically what that's saying is we're looking at short-term rates going up at a faster rate than long-term rates. This means more liquidity in the system. There's more liquidity in the system. This means the dollar is structurally going to get weaker over time. Now, that doesn't mean we're not going to see bounces. Everybody, every single day there's a bounce. Everybody writes me like they're telling me something I don't know. I'm like, I know there's going to be bounces. I know this thing's going to go. It's not going to be a straight down line. I even think it could get back in the box a little bit here. It wouldn't surprise me to see it get back in the box. That being between like 101.50 all the way to 107. I wouldn't be surprised about that. But I think that it's just going to continue to make lower highs, meaning, I don't think we're going to take out that high from earlier this year. I don't think that. I think that's would be very improbable at the moment. I think the highest probability bet is that we continue to make lower highs and we move lower. Really, for me here, above 101.21 is the level I'm looking at for a major level. If that breaks over 101.21, I would say, okay, well, this is probably going to be a problem for a lot of markets at the moment. Precious metals, energy, stocks, even tech stocks, basically everything across the board. However, the market isn't saying that, Sam, and that's something that we need to pay attention to here. Like energy stocks are starting to move. We're starting to see the gold miners starting to bottom out, go move up higher. HL's one today up, I think it was 20 something percent at the top, but now it's down to only 12% up day. So pretty
Only 12%.
only a 12% up day, but it's breaking some major levels. Like the copper miners look great. We're continuing to see this strength in these sectors that do not do well if we're in a strong dollar environment. I think
And
they're
I think
all
it also speaks to like chart number four, Latin America breaking a multi-decade downtrend line. Latin America for a very, very long time has been a terrible place to invest, but it's breaking out. And, a large part of that is because of the currencies. This is very much a currency trade, and this suggests that a weaker dollar is probably going to be here for a long time.
Yes, I agree. And I think that's like what you said is perfect because I was thinking that before. I'm glad you brought this up. This is why Sam's so important because my thoughts go a little bit all over the place sometimes. Sam brings me back to real life sometimes. So getting back here, looking at the international stocks, earlier this year, this is what we said every single time the dollar bounced. Well, the international stocks aren't rolling over. Therefore, I'd be very surprised to see the dollar just strengthen up here and go in a straight up line. So the international stocks are still doing very well all the way to this point, which is we were talking about that all the way back in Q1. Now we're in Q4. Same scenario here. So we're looking at international stocks are doing great. Copper miners are doing great. Gold miners are bottoming out. All of these things together, not to mention aluminum stocks. I mean, all these things together are starting to tell the story that we're in a weak dollar cycle. There will be bounces. There will be periods of time. But however, the reason why I don't pay so much attention to bounces, and this should be said, which is I'm trying to trade these major trends. I'm trying to make the big money. Big money is not made by me buying a counter trend rally for a couple bucks and rolling that trade over. Even if I can catch it perfectly, it's really hard to do. But something that's much easier to do is catch these major trends. ILF breaking out, that's a major trend. That could be a huge reversal here, moving up to 60, 70, $80. Not to mention, if you get into the individual stocks, you could be looking at 1000% returns in some of these names. So I like to catch these major trends. Gold miners, perfect example, 110% this year in the sector, not to mention all of the trades we've been giving to our premium subscribers at the Gold Rush. So we're looking at 5X and 10X winners. So these are the trends I want to catch. I don't really care about a counter trend rally in the dollar.
And Frey Lee in the YouTube chat asks a great question. Can the dollar go higher and EM still go higher? I think that's a big question right now, Jason. You have the dollar at 100 and you have EEM also at a key level of interest that goes back to the great financial crisis. So, it seems like one of them has to be wrong here.
Yeah, I think that once again, it's what's the stronger trend at the moment is what I always put the most weight in. The stronger trend at the moment is emerging markets. So if we're seeing emerging markets starting to move higher, and we've seen this trending all year long, and it's massively outperforming the dollar this year. I think the dollar's still down 7 or 8% this year to date. I would bet on the thing that's the stronger trend. So once again, like people are going to look at this and go, "Oh my gosh, it's a resistant zone," or you're going to probably come down here. Look at the dollar; it's telling you this. Most of the time, it's when you see that very strong trend. Not to mention, this would be a triple top. Triple tops on a long-term time frame don't tend to happen a lot. Certain commodities do it. Certain things can put in triple tops, but most of the time, you're not going to see a lot of triple tops. So thinking about it that way, I would still bet on the fact that EEM is going to move. Not to mention South Korea. Go if you guys want to see a chart. Look at monthly South Korea what EWY. Look at the
Yeah.
monthly chart, man. That is just ripping higher. Look at Europe. Look at all these international stocks. Like they're moving in such a way that is really telling you that emerging markets are going to move with it. So I think this is going to break out to the upside. I think a lot of money is going to be made in these areas. I think people overlooking emerging markets right now is crazy. Absolutely crazy. I almost had to swear. Try not to on YouTube. I know it's bad for the algorithm or something, but man, it's effing crazy that people are looking at this and going, well, I don't really like emerging markets. However, if I said something like, hey, you know what, buy Baba, people would be like, oh yeah, Baba, I love Baba. Baba's a great stock, blah, blah, blah. It's just understand that, like, sometimes you want to be in the United States. The last 10 years, the United States has been the massive outperformer. Now it's a time where we're looking in other areas with a weak dollar environment. You want to start really getting interested in emerging markets. And I definitely like Latin America above them all right now. I keep talking about it. I keep seeing great charts from everybody. Latin America looks great.
Totally. And you, as a fund manager, you're certainly ahead of the curve. I know there's a lot of portfolio managers out there that have struggled to rotate into emerging markets. They're still focused on buying, US tech stocks. They only buy US tech stocks. They don't invest in Latin America or China or South Korea, like you mentioned before. So,
Oh, they hate
yeah.
it. They hate it. They absolutely hate these things. And it's why the edge exists. It's the people who are going to love the things that are moving up before everybody else are going to make the most amount of money. And when everybody else find, like, when all the fund managers go, this is the greatest thing in the world. I can't believe like you're not in emerging markets, stupid. When that's like a common thing and it's said across the board and it's consensus, that's when that trade is possibly over. The moment nobody's saying that, at the moment, nobody's even like the allocations to gold. We've heard about that, Sam, where we keep hearing about these allocations to gold and more people saying, hey, you know what? Maybe I think it was Morgan Stanley said 60-20-20 portfolio, meaning 20% bonds, 20% gold, 60% stocks. So, they're starting to talk about that, but nobody's saying, hey, you know what? We need more emerging markets in our portfolio. Nobody's saying that at the moment. So I think this trade still has a lot further to go. I think it's going to rip to the upside. This breakout's probably going to be massive, and especially getting into year end, Sam. We're looking at a great seasonal period for stocks, and coming into year end, we're looking at this massive breakout. That could be something that just moves up another 20% before year end pretty easily. And that's emerging markets, the full ETF. If you buy the individual stocks or some of these individual countries inside of it, you're going to do even better.
Totally, Jason. And another area of the market that's really close to breaking out is commodities. So we have the CRB index here, and really just focus on this consolidation right here after the 2022 peak from that multi-year face-ripping rally. I mean, holy cow, Jason, this volatility compression just continues. When will we see the unwind?
Yeah, I'm very interested in this chart. I think that this is going to break out sometime very soon. I think we're starting to see that strength. Sam, you mentioned it the other day on Twitter. You're looking through all these stocks, you're trying to see what's going to start moving next. You're seeing all this strength in energy come up once again. International energy stocks are looking great. You look at Shell, you look at BP. Our stocks in the United States, the domestic ones, are starting to look good. I am saying that this is probably going to be the most significant breakout that happens and possibly going into next year. This could start towards the end of this year and move into next year. It might be one of the most significant trades that we're going to see. Also reminds me a little bit of 2020, where we did see that move. Nothing happened in energy. Energy was terrible, very hard to trade for most of that year. It gets to November, the election happens. You get this huge, I think it was like a 12% gap up in the XLE. ExxonMobil is up 20 and so on. And then you start to see this thing take off for a couple years. I think we're kind of in a very similar scenario at the moment. Remember, gasoline, heating oil, energy as a whole, that's the only thing that really hasn't moved since 2022. We haven't seen much movement out of it. Yes, there's been a couple sectors, but we've seen like XME break to new highs. We've seen the copper miners hit some new highs since 2020, 2022. We've seen all of these things hit new highs. Energy has kind of been the laggard. So it wouldn't be
I brought her.
surprising.
I have a perfect chart for what you're saying, Jason, because it's
Awesome.
so true, guys. Pay attention to what Jason is saying. This is how the commodity cycles work. You know, you start with gold, then you go into the base and industrial metals like copper. I can show you a lot more examples than just copper, but Dr. Copper is by far the most important out of the base and industrial metals complex. And then the final domino to fall is energy stocks. And like you said, Jason, they haven't done anything for years, but they haven't really gone down. They've just been coiling sideways, building up energy, no pun intended, for the next leg higher.
Yeah, and it's just the way the cycles go, and like everybody always asks, well, why isn't silver in there? It's like I'm not going to put 50,000 charts inside of one of these. Like this is the perfect way to look at it. Yes, we understand that gold moves and then silver moves and the gold miners move and then copper moves and the copper miners move. We've seen that happen. So why wouldn't we start to think that energy is going to start to move? Another interesting thing, heating oil has been up more than the whole basically energy complex this year. So heating oil has been very sustainable all year long. This is your diesel fuel, or you can even make jet fuel out of it. So, when you're looking at that and going, okay, well, the distillates are actually holding up. Gasoline actually has been moving up lately for the first time in a while. I think the energy sector is getting ready to take off. I just think like we still same thing. Be patient if you're buying the sector as a whole. XLE over 101, all systems go. Buy the crap out of that thing. But for now, it's like okay, there's a couple things you can buy. I would still go strongest stocks. The international stocks look great, so I'd go the strongest stocks in the sector at the moment. Things like Shell, BP look great. There's a lot of other names in there too. We've been saving those for our subscribers, though. So, look at those names and continue to buy strength here. And then I think the sector is also going to start to follow it at some point. I think it's just silly, like to think about the go to the next chart, Sam. I think it's silly when you think about like energy and bonds, and you look at this chart and you go, okay, well, why in the world would everybody still thinks bonds are bottoming out? Everybody says the opposite of that. Whenever I say that, somebody will write me and be like, "Oh, Jason, like everybody thinks that bonds are going lower." I'm like, I can't find it. I ask people to send me the articles, and I'm sure you could find one if you dig hard enough. Somebody's probably writing an article, or you could find my own articles writing about how bonds are going lower here. But consensus is still that bond prices are going lower, or sorry, bond prices are going higher. Sorry, I'm getting the yields mixed up. Bond prices are going higher. So TLT higher here. I still think that the scenario here that we're going to see is energy going higher, bond prices going lower. And if you look at, anybody in the know really understands like, hey, we're creating a lot of inflation here. We just stopped quantitative tightening. We're still lowering rates. The Fed has become very political. We're not in a scenario anymore where Powell's going, "Hey, we're very data dependent. We're going to sit here. We remain vigilant with our 2% target," and so on. Like he might say some of those things, but he's still lowering rates at the same time. So now we're creating more liquidity in the market, which is also weakening the dollar, which is also bullish for energy. So all these things are bullish for energy in the long run. Yeah, it might chop around. Yeah, it might take some time, but I think overall the trend in energy is about to be up. I think that breakout's going to happen over the next couple months, and I think it's something that we all need to have this chart of XLE on our background and wait for that 101 level. It's going to be very exciting to be trading energy once again once it happens because this sector moves and there's a lot of things to buy and a lot of things that are going to make you a lot of money.
Totally, Jason. And like we didn't bring the chart along, but let's remember that energy is the only sector that's still below that great financial crisis peak. Structurally, if this is a bull market, energy needs to go. Like, it's there's no question about it, Jason. It's just a matter of time before it goes. And we're being patient, we're in no rush. We know that the eventual resolution will be really powerful. But Jason, I want to talk about another base out there that not a lot of people are talking about, and that's coffee futures, because this base goes all the way back to 1977 longer than silver. A lot of people talk about that silver base that goes back to 1980. This chart goes back even further than that, and I think coffee's going to, 500, 800, maybe even higher. I think coffee's going much higher from here. And just look at how it's shaped up over the past year. I mean, what a beautiful consolidation. Like if you stripped the title off of this chart, you said this was like Nvidia or something else. Like you'd buy this chart all day, every day on a breakout above 430, right? Like this looks as good as anything out there.
Yes, when Patrick from the chart report starts sending me things about commodities, he's great at finding these patterns, but like, him getting very excited about commodities really tells you this is one hell of a setup.
Was Patrick messaging you about the coffee?
This same exact setup. So he sent me this like a week or two ago.
I had no idea. That's
yeah,
awesome.
yeah. But like once in a while he'll send me something on some commodity, and he usually finds these great setups. Usually wants to know how to trade them the best, like whether using futures or an ETF and so on. So he always finds these amazing setups, and this is one of them that he brought to me a couple weeks back. But yeah, coffee looks great. It's another one that's just kind of telling you like we're in an inflationary cycle. Things that people use are going up in price. Yes, things like sugar are going down. We're also seeing demand for sugar going down, which is a great thing in the United States. It's very surprising, but demand's finally going down. But coffee, that's not going anywhere. Coffee is known as it's healthy for you now. Like people used to say it was unhealthy, now it's healthy. So people are starting to drink more coffee. People drink it all day long to try to get through their work day. I think this thing's really set up to do something big. I think it's going to continue. I know Sam would always talk about coffee being the new cocoa. I believe that as well. We could see coffee continue to the upside. We're not talking about cocoa when it's going down, which is recently, but when it was making its huge move a couple years back, when it wasn't stopping. I think coffee's just kind of continuing to do that. And it's been a great trend already, Sam. Like this has been a hell of a trend that a lot of people haven't taken advantage of. And also, apologies, it's very hard to take advantage of it in the United States. There's no Joe ETF is gone. There was a couple coffee ETFs, they're all gone nowadays. Basically, right before coffee did its big run, that's normal for the ETF community. But you can look at something like DBA. DBA has a lot of grains, softs in there, and basically they buy the winners. So if like coffee's leading the way, it's going to be the biggest position in the portfolio. So that's a way to take advantage of it.
What do you think about shorting some Starbucks against it, Jason?
I'm not sure. I'm not sure. I've actually, out of all the things I've traded over the years, Starbucks is one of the stocks I've never traded, even though like I'm not a big fan of it. I wouldn't, not just the company, but I don't know, Sam. I don't know. Think about it like
Totally, man.
Hershey's, though.
I'm out here in Naxos, Greece.
Mhm.
Man, the coffee here is incredible, Jason. It's nothing like they make in the U.S.
You don't miss
So
Starbucks?
I do not miss Starbucks or those U.S. coffees. So
Starbucks like
yeah,
is a worst case scenario coffee joint for me. It's a I'm
totally.
on the road. I don't know what else to do. All right, fine. Starbucks. I really
Yeah,
try to stay away from it though.
yeah. And I'm not that bougie with my coffee. Like I'm happy with just like a gas station coffee or something like that. But man, you can really tell the difference here.
Oh yeah.
It's really it's good. Uh,
European coffee is life changing.
yeah,
Life changing.
totally.
Way
Wavy
more
knows
caffeine.
what's up.
Yeah, way more
Shout
caffeine.
out Wavy. All right, guys, let's finish today's show with a little bit of livestock and grains talk because I think this is a really interesting area of commodities that not a lot of people are talking about right now, Jason. Feeder cattle futures for years have been in one of the strongest uptrends of all time. If you use the percent from the 12-month EMA and you zoom out all the way to the 1970s, you can see based on that breadth or momentum indicator, if you will, this is the best bull market for feeder cattle futures since the 1970s, which ended in 1979 and led to 20 years of no progress, Jason. So, I'm not saying cattle needs to go sideways for 20 years, but I think I think it's due for an extended consolidation, corrective wave, chop, churn, whatever you want to call it. And if that's the case, I think the grains are going to rip, Jason. And that's including corn. You can talk about soybeans, wheat. All of the grains are looking incredible. This is just one chart that I brought along that just shows that long-term negative correlation between livestock and the grains. And, corn looks really constructive here, but it looks nothing like the soybean futures, man. They've just been ripping every single day to new 52-week highs.
Yes, and everybody's going to go and look at it and go, okay, it must be Donald Trump in China or these things. It's like, no, look at the damn charts, guys. Like the charts will tell you everything you need to know. Feeder cattle and cattle, like what do they eat? So they eat soybean meal, they eat corn. That's why we see these correlations. So when the price is so high for cattle, that means there's less supply of cattle, means there's less demand for things like corn. Now that supply is actually going back up again, which means cattle prices are now going down, corn prices are now going up as there's more demand for corn. So I think we have a great scenario here to make a lot of money. So there are ETFs for the grains. Soybean is the soybean ETF. Corn is the corn ETF. You guys could start looking at those. But once again, this is a really bullish setup here. As long as cattle prices continue to fall, not to mention be nice to go to the store and not have to pay, $20 for a 8-ounce steak. That'd be fantastic. Not to mention a half cow is getting very expensive as well. So whatever you're buying meat wise, it's getting really pricey. So seeing this come down is going to be great for a lot of reasons. Also, Sam, I wanted to ask the chat. My chat's not working for some reasons, but Sam will let me know. Have you guys know who Sean Hackett is? If you don't, he's one of the best agricultural analysts out there. He's a good guy. He's a buddy of mine. I've had him on my show before. I'd love to bring him on Gold Rush at some point if you guys are interested in learning more about cattle markets and corn markets and grain markets and so on. So let
I
me
don't
know.
care what the chat says, Jason. I want to have this conversation. This sounds awesome.
I want to have it too, but I'm just asking. But like, we're probably gonna have it either way. But
Yeah.
we'd like your guys' opinion on it as well. Sean's a great guy, and he is so good at this stuff, and he could really teach us all a lot of stuff about these markets, and he knows them inside and out. So let's try to make that happen. But yeah, for now, I'm thinking continue to take the soybeans already in a buy signal. Corn is starting to get closer to a buy signal. I really like the way that both these markets look. I want to be long them. I think it's going to make some money.
Totally. We have Frey Lee in the chat, Jason. Says, bring him on.
Nice,
Sold. It's gonna
nice.
happen. All right, everybody. Thank you for being here and chiming in on the YouTube chat for another episode of Gold Rush Live here on YouTube. Um, Also, Nick Thomas says you should bring him on, Jason. So it's consensus. It needs to
Nice.
happen.
Nice.
If you guys like what we had to say today, go ahead and check out the link that we have in the description on YouTube. You can see our research there. Some of it's free. You can check that out. And if you like what we have to say and you want the trade ideas, whether it's for a precious metal stock, an energy stock, bonds, the currency levels, all of it, you get it with Gold Rush Premium, and it's just $12.99 a year. And you get a 30-day money back guarantee whenever you join us. So check out the link in the description for more information. And again, thank you all for being here. Shout out to Frey Lee, Wavy McFly, Celtic Wrath. We have got Nick Thomas, our man Higgins, looking at potash and fertilizer stocks. Shout out, Mr. Higgins.
It's getting
That's
there.
awesome.
It's getting there. It's not quite there
Totally.
just yet, but we'll update you. It's getting very close to start looking at these fertilizer stocks once again. Obviously, there's always going to be a couple of them that look good already, but I like when the whole sector is moving. I always think back to the Jesse Livermore idea, which is most of the stocks in a bull market go up, most of the stocks in a bear market go down. So when I kind of get consensus that the sector is moving, I get more bullish on the entire sector and start finding the stocks inside the sector.
Totally. Well said. I think that's a good place to leave it for today. Thank you, everybody, for being here. We will be back with another great episode of Gold Rush next week, maybe with a special guest. So stay tuned, and we'll keep bringing you more great content here on Stock Market Media. Adios, everyone.
Later, guys.